The banking app opens. The number is exactly where it was supposed to be. No overdraft, no warning. Still, Evan closes the app and opens it again. Same number. Nothing wrong. And yet the feeling doesn't leave. That quiet sense that the money is already spoken for, even though it hasn't technically moved yet. That feeling shows up before spending happens, before bills hit, before anything actually goes wrong. It shows up while standing in the kitchen, scrolling the calendar. Rent in a few days? Utilities right after? Insurance later in the month. The paycheck hasn't even cleared yet, and the money already feels used. That same tension appears in other places. At work, when someone mentions picking up extra hours but still feeling behind. At a family gathering where the conversation drifts toward prices and everyone nods instead of arguing. Online where people joke about being broke while clearly doing everything they're supposed to be doing. Different ages, different paths, same background stress. Here's the thing. This doesn't feel like reckless spending. It doesn't feel like ignoring reality. It feels like following the rules and still being nudged into a corner. That's when the question changes. Not what went wrong, but why does this keep happening? Now, this is where it gets strange. The problem isn't a single bill. It's the space between bills shrinking. Pay arrives on a schedule. Life doesn't. Prices move constantly. Rent resets once a year, but groceries change week to week. Gas fluctuates daily. Insurance creeps up quietly. Internet jumps after a promo ends. Meanwhile, income stays polite and predictable. Look at a normal month. Rent sits at $1,450. Utilities average $180. Phone and internet run $140. Insurance lands at $210. That's nearly $2,000 before food or transportation. Groceries add $450. Gas hits $180. Now, the baseline cost of existing is around $2,600. If take-home pay is $3,200, that leaves $600 for everything else. Clothes, medical, repairs, social life. Anything unexpected? That gap looks reasonable on paper. In real life, it disappears fast. Here's what most people don't realize. That $600 isn't freedom. It's a buffer. And buffers get eaten quietly. A tire replacement, a dentist visit, a birthday gift. One higher than usual electric bill. The buffer doesn't vanish dramatically. It erodes. This is where the pressure starts to show up mentally. Checking the account more often. Replaying purchases after they're made. Standing in a store comparing prices longer than necessary. Not because the money isn't there, but because the margin feels thin. Every decision carries weight. This keeps happening because the system is built around timing, not comfort. Bills expect perfect alignment. Rent doesn't wait for a good month. Interest doesn't pause for stress. But income shows up in chunks. That gap between paydays is where tension lives. That's where credit cards feel helpful. Not for luxury, for groceries, for gas, for normal life when timing doesn't line up. Look, nobody wakes up planning to carry a balance. It starts as a bridge. Then the bridge becomes part of the road. A $200 balance turns into $400. Not because spending explodes, but because life doesn't slow down to let the balance clear. Now, someone might think the answer is earning more, and sure, that helps in theory. But raises tend to arrive slower than costs. A $1 raise per hour might add around $160 a month after taxes. That sounds useful until rent jumps $100, groceries rise another $80, and insurance increases quietly. The raise feels real, but the relief never shows up. Another belief is that better planning fixes this. But planning only works when there's space to plan with. When every dollar already has a job, planning becomes constant negotiation. Which bill can wait? Which expense can slide? Which week feels safer? This is where it gets really interesting. The tightness isn't just financial, it's psychological. It's the constant background math, the mental checklist running all day, the way money occupies space even when nothing is being bought. That pressure changes behavior. People delay joy, skip rest, put off health. Not because they don't value those things, but because everything feels conditional. Here's what most people don't say out loud. Doing everything right used to create breathing room. Now it mostly creates survival stability. Bills get paid, the account stays positive. But comfort never quite arrives. This isn't about failure, it's about structure. A setup where prices adjust faster than pay, where timing mismatches create dependence, and where the stress shows up long before any real crisis does. No villain, no dramatic collapse, just friction built into everyday life. By the end of the month, nothing dramatic happens. Rent clears, bills go through. The balance doesn't hit zero, but the feeling remains. That sense of narrow margins, of walking carefully, of knowing that one surprise could tip the whole thing. And once that's seen clearly, something shifts. Not motivation, not inspiration, just clarity. The tightness finally makes sense, even if it doesn't disappear.